Dear subscribers, welcome to the weekend report. So we'll take a look at the key markets in this video, and I will also post some of the charts in the description as well. This newsletter is going to be more in the short form of video, so I think I'll be able to explain a few things more clearly. I really appreciate for you guys being a subscriber. So we'll start, and this is for educational purposes only, and it's not a financial advice. Okay, so let's start with some statistics how the markets actually performed last week. This is a report which is produced by my system. It's a proprietary system that I've built here, and these are the daily returns as of last Friday. We can see that there was a big crush in the volatility. The VIX index fell by 11%. VXN, which is more specific to the Nasdaq 100, also fell by 11%. And what we can see is the New York Stock Exchange Index (NYE). It was the best performer, up 1.26% on the day, followed by a Dow Jones Industrial, and then the S&P 500 up nearly 1%, and Nasdaq 100 it was up, but not as much as the others. And in Europe, we can see that slightly in the green, FTSE 100, and pretty much unchanged was the France CAC 40, and the Indian Stock Exchange, the Sensex, down about 0.5%, and the German DAX, quite surprisingly, down minus 0.8%. And some of these Asian indices which have done quite well throughout the year, they lost quite a bit. So this is HSI, which is the Hong Kong Shanghai Index, and then the Japan's Nikkei 225, and these are the South Korean indices. On the weekly basis, what we can see is the VIX have still been up for the week, and it was a pretty volatile week in the market. But we can see, with the exception of India, all the other indices that we follow in the world, they closed in the negative for the week. And then on the month to date, VIX is still up. November has been, a month in which there has been a lot of volatility, and you can see, with the exception of India, all the major world indices are in the negative. And these are the high gainers. The Kospi 200, for example, down the most. The Nikkei has actually been the weakest. And then on a year-to-date basis, we can see these Asian indices, they have done pretty well. The volatility is up as well quite a bit, and look, all the major indices are in the positive. Let's take a look at the ETFs here. So this is the report being produced from my system, and here what we can see is this is how the picture looked like last Friday. We can see all the ETFs closed in the positive. The market was making an attempt to rally, trying to put it in a bottom, and we'll try to at least for a bottom for because next week is we have a Q holiday coming up as well. So look at this ARC Genomics up 6.65%, followed by Home Builders XHP. This is last Friday, and if we move over to the entire week on the week to date basis, what we can see is a mixed picture. The genomics actually performed much better for past week, 7.92%, and then what we have is the IBP, which is biotech ETF, did pretty well in comparison, but you can see a pretty mixed picture. A lot of red, we see a lot of sectors being down. And ARC W, which is the next generation internet ETF, so that has blockchain kind of related technologies, and we all know that the crypto is going through a difficult period. We'll take a look at the chart of Bitcoin. That was down quite a bit. And then on the month to date basis, month of November has been a pretty tough month, and all the ARC indices ETFs are down, and we have the biotech performing. XLV, and XLV is what? XLV is the healthcare sector, which has performed much better, and is a top performer in the S&P 500, in the ETFs, in the sectors. And then we'll take a look at a particular stock called MDT. I covered that on Substack a few weeks ago that has performed quite well actually last week. And then these are on the year-to-date basis, and we can see, with the exception of XOP, which is for the exploration of petroleum, all the ETFs are in the green. Really big performer is the ARC X, which is the exploration and innovation ETF, followed by XAR. Now the XAR is really interesting. It is in the industrial sector, but the subsector is Spider S&P Aerospace and Defense ETF, and we know that there are a lot of kinetic wars going on around the world, so that has done pretty well on year-to-date basis. XLU, which is utilities, is done quite well, and let's take a look at the XLF, up 7.67%. Retail, which is XRT, just up 1%. Not a great performer. And we all know that consumers are under pressure, so that is being shown here in the performance of these sectors as well. Now let's take a look at the relative strength. So relative strength is those stocks which are actually outperforming the S&P 500, and we take a look at these on daily basis, on a week-to-day basis, monthly basis, and of course yearly basis. And there have been certain stocks which on the longer term, month to date and yearly basis, performing extremely well against the S&P 500. So here we go, and what we can see is that these are the names for the daily stock on the daily basis. On just last Friday, they outperformed the S&P 500. Let's take a look at what is going on a week-to-date basis, a weekly one. We can see Juniper. It has been making the list for quite some time, although the S&P 500 lost on the week, but these stocks actually perform much better. Google was up 8.18% and outperformed by 10.13% the S&P 500. MDT, which is Medtronic in the healthcare, was returned 5.56% and outperformed the S&P 500 by 7.51%. Another one in the healthcare is actually Revity. I don't know what they do, but we can see a fair amount of healthcare there. In fact, 4 of them making the list in the 10, so that's 40% coming from just the healthcare. Solventum and then Regeneron Pharmaceuticals also making the list. And then if we move over to the month to date basis, we can see healthcare names here again. I think 5 of them, so 50% of the list of the top 10 is coming from the healthcare sector. Here we have Eli Lilly, and then Eli Lilly has been up 22.81% up on month-to-date basis, and month is not over yet. It has significantly outperformed the S&P 500. And then we have Paramount Global, which is in the communication services, returning 28.71% over the course of the month on month-to-date basis, outperforming the S&P 500 by 32.18%. So pretty interesting what is going on. Akami Technologies, I have to take a look at this stock because they do make the list quite often actually in the top 10. I think I'm going to extend this to top 25 perhaps, so that we have a bigger list to look at. And then Expeditors International in the sector of industrial is also making the list. This is really interesting because these are the stocks which on a year-to-date basis have been outperforming the S&P 500. The S&P 500 is up only 12.26%, but some of these stocks, such as the Seagate Technology, is up 175.16%. Micron is up 146.4%, outperforming the S&P by 134.14%. Western Digital, which is in a similar kind of business to the Seagate, is up 133.40% and outperforming the S&P 500 by 121.16%. Gold, we all know that in 2025 gold has really performed well. However, it has pulled back a little bit since October, around 19th of October, that time frame. But the Newmont Mining, which is a gold miner, is 124.31%, outperforming the S&P 500 by 112%. And then we have the WBD, Warner Bros. Discovery, is also making the list. Palantir. Okay, recently maybe the price action is not that great, which is in the last couple of weeks perhaps, because technology stocks are under the pressure in the month of November. But nonetheless, performance has been 104%, nearly 105%, outperforming the S&P by 92.5% roughly. Lam Research also makes the list. We have Paramount Global, and we have Howmet Aerospace, and we all know that the aerospace defense and aerospace sector has done pretty well in 2025. So that's a pretty interesting list to take a look at. Now let's actually start to take a look at our charts. This is the chart of Nasdaq 100. This is the cash index, and here we were watching for the market to get down to this 23.6% Fibonacci retracement of these lows, going back all the way to here, from the April lows to the all-time highs reached. And this is what the market did last Friday, and the market closed up about 0.77%. So it did appear like the market was trying to find a support, or at least some sort of a bottom in place. We were also completing this blue ABCD pattern nearby, structural support coming from here. The market has been down about a little over, we can say, by 8.87%, and previously in this leg, this entire leg higher from April lows, this was the biggest retracement shown here. It was minus 8.45%. So in terms of percentage point, we are at the market symmetry level, and then of course we have a key holiday coming up next week. So we are likely to see, in terms of the seasonality around that, a market usually like to rally. So we could see some sort of a rally come in early part. So that is next Tuesday, Wednesday, that time frame. So around perhaps 26, 27 of April. That's the time frame. 26 to 28th of April, that's the time frame I'm looking at. Let's see what the market will do. But in terms of the pattern, we have this ABCD right at the 23.6% Fibonacci retracement. So pretty good support level also coming in from the structure. Monday, there could be pretty volatile. The market might actually try to attempt to make a kind of a double bottom, try to take these lows out. I'm expecting that perhaps the market will eventually, in early part of next week, will try to make a V bottom intraday, and a strong buying to come in. Let's see what happens. Thus far, we can see that although the price is down below the 20-day moving average, blue line, it's still above the 200-day moving average. Now let's take a look at the NQ, which is the Nasdaq 100 futures. So for short term, I really like to take a look at the Nasdaq futures. The cash markets I take a look at for the longer term. But I think it's really good to take a look at both of them, because sometimes they present slightly different pictures. And even perhaps we'll take a look at the QQQ as well, the ETFs, because that's where the cash, well, like a lot of institutions, they look at that because of the cash buying side of things. Now it has also completed this big ABCD, blue in blue, and then I have the smaller 61.8% retracement from these lows. I have not drawn this one from the lows in April, so let's do that right now, and I am going to change this. Yeah, there you go. Get rid of this one, it's too far away. And what we can see is we have double ratios coming up right here. So that's an important level to watch. Again, as I said, the market could, because I didn't see this candle. There's like the market did rally, but the sellers came in, and it's not really a good looking candle. I would like to see a candle something like this, which is a more repulsive candle. The buyers maintain their pressure in the close, so a really good looking kind of a candle. So that's why I'm thinking that maybe an attempt could be made to take out these lows. Buyers step in, we could see some V bottom appear. So this is the Nasdaq 100 futures. Now let's take a look at SPX, which is the S&P 500 cash. So here what we have is market making a very nice ABCD. This is what we were expecting. We saw a rally come in, then these were our levels that we were watching for a perhaps a fade in, and this is what we got. And the next day the market, there was no follow through. This is the really good point to note, because we have had this situation right here. Market was down minus 2.71%, no follow through. The next day market was down only minus 1.56%. Think about it, on 20th of November, such a big ugly looking candle, no follow through. Here we have had 2 consecutive days of selling, and the market was down minus 1.6160%, no follow through. Now in the Nasdaq, we have already made the ABCD right to the 23.6% Fibonacci retracement. We haven't done that in the S&P 500 cash, and if we look at this decline in terms of percentage, was minus 6.89%. This one has been minus 5.74%, so still within the parameters to watch for. So whether this red pattern might fold, I think I'll just keep it there for now. But just because of the completed pattern in S&P, Nasdaq 100 cash, and also the futures right at those key Fibonacci retracement, maybe we might not see this market get down to this level. But I'm gonna still leave it there for the next couple of trading days, and we will be watching whether we have something like this happening. Otherwise, I think the Nasdaq, the pattern completed there, because when we had this blue ABCD one, we did not have a completed ABCD in the Nasdaq, but now we do. So I think we'll just leave it there for now, and keep an eye on it, because market might not get there. That possibility is there. So here we go. So this is the futures S&P 500. This is what we were watching, and if you recall the last video around here, we had come up with these levels. It went right up to the 61.8% retracement of this the decline from CD leg, and this is where the sellers were just sitting there, and boom, we had a minus 2.15% day on 20th of November. Now again, this entire decline is minus 5.79%, whereas this one was a much bigger decline, so still within the parameters. Now we have this 61.8% retracement right from here, and I'm not going to draw the 23.6% Fibonacci retracement, but if I were to, let's actually do that, because I think on the cash we have already seen this. So the futures are going to be quite similar. There we go. Not there quite there yet, so a little bit stronger, but this is what we are actually watching for this market. And again, as I said, there is a possibility that Nasdaq, if it gets stronger, we might not see this market pull back to 64.50, and the market might actually make an attempt to rally, at least go sideways. The key pivot point will be, of course, 6787. If the market is strong enough, if it is able to get above this pivot of 20th of November, above the 20-day moving average, then things begin to look much better for the bulls there. Now let's take a look at this another market, which is NYA. So I'm gonna move over to the weekly chart now on this one, and here we go. So it had a nice completed ABCD, missed the exact D point, came pretty close, and what we are seeing is just going into a sideways range. If it begins to get below this level of last week, then I think a further pullback, more like a sideways price action perhaps. And then if we take a look at the Russell 2000 from the perspective of the futures, we had a nice ABCD completed. We have had this pullback, which is about minus 10.27%. It is the biggest one in comparison to the S&P 500 and the Nasdaq 100. And I mean, we have had pullbacks for about minus 7.3% was the one in April, I believe. Yeah, I mean, I have to get down to the daily to confirm that. I'm just reading these. So what is happening right here? Let's draw a retracement. Here we go. and here. Okay, so it's just stuck between the 23.6% and 38.2%, not as precise as some of the other indices. And let's take it from this one as well. And by the looks of it, it might be the 61.8. Yeah, there you go, to tick to the bottom. So it just kind of bottomed between these levels last week, or I shouldn't say the bottom because it's not confirmed, but it found support right from the 2300 level, which is the 61.8% from this low of 28th of July. So there is some symmetry there. I'm gonna get rid of the 38.2 so it's more clear. So although the Russell has been the weakest of the major indices, it has retraced right down to the key level. So that is something we need to keep in mind. Now, let's take a look at what is happening with the Bitcoin, because this is where the real issue is actually coming in from. Bitcoin or the crypto has been really, really weak in comparison, right? And the Bitcoin is down. Let's take a look from the high to the low. It was down minus 36%. I think it's bigger than this decline in terms of the percentage. Here you go. That one was about 31.25%, and it broke below. Today is Sunday, right, when I'm recording, and broke below this trend line as well. But I'll show you what it has done. If it is going to close around these levels, it will still be above the 38.2% fib retracement of this entire CD leg higher, which is an extended CD leg, right? That is a key point to note. Now, if you look at this big bear BC leg right here, that was a 75% decline. It was huge. That was a huge decline. So I'm trying to find areas of support, right? And if I just take it up there, we can see that the market also retraced to the 61.8%. Let me actually bring it here. Let me get rid of this, just taking space. Let me bring it to the right hand side, the labels. There you go. So that's a 61.8% Fibonacci retracement from these lows right here. Okay, so it has hit a confluence level between 85,000. This is what we were targeting a few days ago on the daily chart, and the 61.8% around the 79,600. Getting below this is where usually people like to put their stops, etc., around 74,000. Maybe a sweep lower, finding support from the structure right here. Bitcoin, how it moves when it moves. That possibility is still there, but we are actually in an area where, look at on the daily chart, it is rallying, and that's a good sign to take as a risk on sentiment, because this is going to then indicate that the stock indices are likely to open higher as well, which I think they have. So we'll have a quick look. But there was a lot of liquidity concerns coming from this market, and it has just found support between those levels that I showed you on the daily chart. And the interesting thing on the weekly chart, and the interesting thing is, if the market closes as high as it is, where it is now, we've got about an hour left in closing of, because it's a 24/7 market, it will be closing above the 78.6% retracement, that is above the key 85,000 level after finding that support. So I think we could be in an area where Bitcoin might actually be putting in a bottom, by the looks of it. So there we go. If it did turn out to be a pretty good bottom, then that will show you how this whole ABCD analysis is working. We thought we had a pretty good chance for a bottom here. It did rally for a few days. Then of course we followed the price action, or good looking price action. We had further support levels. Now watching for really nice price action to give us clues whether this level is gonna hold or not. but these were the levels that we had been watching for, so that's a good thing. Let's take a really quick look at the ES. Where did it open? I don't see it right now. Okay, so that's fine. We'll just take a look at what the US dollar is doing. So let's take a look at the US dollar. Now, the US dollar has been pretty strong. We're putting a bottom, some sort of a bottom on the 17th of September. It missed our exact low by the kind of low we were looking at around 94.50 by about a point and a half, about a point and a quarter, something like that, and it's just been rallying. Now if it is in this dotted ABCD, this is where the 101.15 is the major point where we could see the market actually find resistance. Otherwise, I think what could happen is here it's just going sideways. We could see a pullback back into these levels at the bottom of this channel right here. Maybe find support from there and put in like a final top, but I think we are gonna see weakness in the US dollar. This is the really long-term monthly pattern that we had been watching for, and this is the 101.15 level. It could still get there, but maybe we see some retracement come in on the daily chart, then it tries to make an attempt to that level. So the video is getting really long, so I'm gonna just have a very quick look on the treasuries, then we'll take a look at the gold. Here we go. Yeah, so last Friday we saw the yields actually move lower, which is gonna be good for risky assets such as stock, and we have this as the 3.2 to 3% as our target on the 2-year, and on the TNX we have seen this is 10-year treasury notes. The yields actually move lower. A lot of distribution here, hit the exact 38.2% retracement around here as well. So I think it can get down to 3.7%, which has been our target. And on the long bond yields, this one is pretty stubborn because it's really long duration, but it's still got a chance to hit 4.5%. We'll see whether it gets there or not, but this one has been more sticky. So let's take a look at the gold market, and then I think we'll have to leave it there, and I'll try to do another video to cover some of the other markets. But right here, look, I think what we are doing is we are in this ABCD structure lower. 37.50 is where we could get down to, so that's going to be one-to-one projection. And then if we just let me take it from here, so I'm going to move it slightly here above because this is where the real support came in. And then if I just make it 1.618, yep, so it's got a chance to get down to 38.50, 37.50 is where it is really good support. Below that, 3600, 3500, where we have this structure is possible, but I think that will be completing an ABCD around 37.50. So that's the level that I'm watching for. If the market gets down there, the market is going more like sideways. And if it does this ABC, it'll be exactly something like this. I have longer term time targets for the gold market, and the time analysis by time, I think we go into the September of 2027. I think that's when the market might actually put in some sort of longer term top. So gold still does look bullish. It might just turn out to be an ABCD kind of a correction we had like here, or earlier part of 2025. So we'll be watching the price action really carefully. So thank you very much for watching the video. Apologize, it's been a long video, but we covered quite a lot of things here. So thank you very much. Good luck, good trading, and speak to you guys soon.